Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well, but it seems like now when we're doing these things, you're always traveling. So tell everybody where you are now.
Yeah, I'm in Fort Collins, Colorado, out here for some meetings at Colorado State and getting to talk with a lot of people from across the country that are all gathering here. We drove out. It was a long drive, but we saw a lot of short wheat, I guess is how I would phrase it, short wheat in western Kansas and eastern Colorado. A little bit of it's harvested, and they were planting double crop beans, but very short wheat, not any higher than my boot.
Well, that's kind of fun. When you think about Colorado crops, I generally don't think about wheat necessarily. That's not the first thing that pops to mind. But
Yeah, no, I brought my interns with me this week, and when we hit the Colorado line, they were disappointed that they couldn't instantly see mountains. But about 100 miles later, we finally saw a mountain. So
all right. Well, just looking at where we are today within the market. So what changes did we see from last week?
yeah, last week was a big week with a lot of information coming out. In total, old crop corn for July up 21 cents. Finishing at $7.63. New crop December corn up 16 cents to $7.18. Old crop soybeans up 16 cents on the week to $17.15. That really is kind of surprising, given that we've really taken some momentum off that soybean contract after coming within a nickel of the all-time high for the soybean contract. New crop November soybeans up 5 cents to $15.38. Looking at those different soybean components, soybean oil was down almost a penny and a half to just under 80 cents per pound. And then soybean meal up $11 per short ton to $418. That old crop and new crop July wheat contract down 37 cents on the week to $10.56.
What type of market highlights did we really see from last week? Obviously, we came off the WASDE report.
Yeah, like I said, big week. A lot of information coming out last week. We're going to get another big week this week, but U.S. ethanol production was down 42,000 barrels last week after hitting a calendar year high the week before. Ethanol remains at a strong level. It continues to do well. Ethanol exports being a big player there as well. Export sales for old crop commodities remain weak, but did saw some improvement week over week for corn, soybeans, and wheat. Grain sorghum was the only commodity that was down from the previous week. New crop export sales for soybeans were strong and continue to add to already large new crop soybean sales for this point of the year. Last week's WASDE report made a few adjustments both on the domestic and world side. We'll talk about those more here in a second. Weekly U.S. grain export inspections were down for corn and grain sorghum on the week, while up for soybeans and wheat. This is the first week of the new crop marketing year for wheat. And then this week's crop progress report showed 88% of the U.S. soybean crop planted compared to 78% last week and 93% last year. Kansas and Missouri remain the two slow states after North Dakota jumped 34% last week. Spring wheat planting is basically done at 94%, up from 82% the week before. The corn conditions rating fell just slightly to 379. A perfect score is 500, but that remains above where we were last year. Winter wheat harvest has just begun. 10% of the U.S. wheat crop is harvested mostly in Texas and Oklahoma. But I do expect with some of the high temperatures that were expected this week and wind and dry weather that we'll see Kansas and the remaining parts of Oklahoma see some strong wheat harvest this week.
So really looking at just the crop progress reports, when do you expect to start seeing more adjustments as far as those impacting the market on a weekly basis?
Yeah, great question. I think there's two components to that. So one's the condition score, which is what you asked about. The second part of that is actual acreage intentions, right? As we've kind of learned over the last couple of years, there's two ways to get planting progress to go up. And that's to actually get the planters in the field and roll. And the second way is for farmers to reduce what they intend to plant. Both those numbers cause the percentage to go up. So here at the end of the month, we're going to get the planting acreage report, or the acreage report in terms of what actually got planted. And I'll be looking for two things, two commodities in specific: spring wheat acres and corn acres. Of course, corn implies soybean acres as well. But I think those two will be very interesting numbers. The trade will start anticipating what those could be in the weeks ahead. And I think that's going to overshadow any of the conditions reports. So your specific question about what we could see with condition scores, so the market pays attention to them at this point of the year in terms of what the crop is doing, but it becomes a big deal when we get into what I'm going to call the second week of July, which is typically a pollination window for us for corn. And the outlook looks dry into August, right? Like that's when markets start really paying attention to condition scores. And so it's really kind of a double barrel approach. One, condition scores have to be, maybe a little bit declining, right? And the outlook for weather has to be hot and dry. Given what we saw from the weather models this week, the hot and dry certainly looked like it could be a player.
Well, one of the things, talking about the acreage conversation, that was one of the things that we discussed last week as we were heading into last week's WASDE report from USDA, their supply and demand report. So really, where did you see things shaping up? Were you surprised by the numbers that USDA kicked out?
No, not surprised at all on anything. I think some people had anticipated a yield revision up. So again, USDA revised that May yield number down 4 bushels per acre from their February trend adjustment. It's not unheard of in May, but certainly not common. So they revised it down 4. I got a couple of traders that called out to me asking if I thought they would increase the corn number in June, and I didn't really think so. I expected USDA to keep that corn number. They're not going to touch the acreage until we get the acreage report here at the end of the month. So the supply side largely, was the same, and I anticipated that. The revisions they did make on corn was they did shrink that old crop corn export number down 50 million bushels. That increases old crop stocks, ending stocks, that increases new crop beginning stocks. They didn't make any other changes to demand for new crop, and so that increased the new crop carry out as well. If you look at what our inspections have been doing, we've been running 125 to 130 million bushels below the pace needed for a couple of weeks now. And, lowering it 50 million bushels certainly gets it closer. But I would contend that maybe we could see another revision for corn exports in the near future as well. So, yeah, not really surprising from the WASDE. I thought everything was well within range.
So you talk about some maybe decreased factors up for demand on the global side of things. So what are the driving forces or factors behind that? Why aren't we seeing those inspection totals really on pace with where you might expect or we might normally see?
A couple of big things. One, high prices are starting to curtail demand. I'm comfortable saying that. I've kind of been there, I think, for a couple of weeks now, to where we've seen indication that corn demand just hasn't been able to keep the strong pace that we had been seeing. The one exception being ethanol, and ethanol's being supported by high oil prices. Corn oil is high as well as a byproduct. We've seen that whole vegetable oil complex high. So that's kind of the one area of the balance sheet on the corn side that's strong. On that export side, we're seeing some added pressure, export pressure, I guess, from South America. I think we're finding out that their corn crop is going to turn out to be better, a little bit better than what we thought. We didn't see USDA make any revisions really significant on the global corn supply side, but you look at Brazil's version of USDA and a couple other reporting agencies out of South America, and the safrinha crop seems to be stronger than what had originally been thought. So a little bit stronger production down there, increasing competition for corn exports. Then the second big thing, Will, is the US dollar continues to strengthen. Last week, we almost got up to a point that we have not seen in 20 years. Anytime the US dollar gets that high, it is hard for US commodities to compete on the global market because it makes our products more expensive, all else equal. And so I think that's playing on the markets as well. Now, we did see Mexico come through with a purchase this morning of US corn of about, I think it was roughly 6 million bushels, 8 million bushels. And that's a good purchase given some of the other factors we see, but certainly would like to see more of those in the weeks and months ahead.
So I want to go back to talking about high prices curtailing demand, like you mentioned before. So what are some of the alternatives that might be being pushed towards? Because a lot of you look at feeders, you're like, oh well, wheat's hovering over $10. Well, maybe we'll look at corn, but then corn's high. So how is the market finding alternatives to really be dropping some of this demand?
Yeah, no, and there's not a lot of alternatives, right? So like it's shrinking feed use, trying to be as you know conservative, I guess, as possible in terms of feed use. Just because all the feed prices are high. Everything's high. Wheat's high. Soybean meal obviously is holding up there as well, and dried distillers grains and sorghum, everything's high, right? And so I think that's the challenge for feeders. As I talk to cattle producers, and I realize we're spilling over into Scott and Megan's program
Yeah.
now, but as I talk to cattle producers, right, like they tell us that the feed cost side of the equation is just burdensome, and they're struggling to turn a profit. And so I think you're seeing some cutbacks in terms of feed use. I'm trying to extend out as much of the available supply, whether that's hay, whether that's whatever they've got from a haylage component, trying to extend that as far as they can.
Well, and it's pretty interesting. One of the things that Scott always says, just to rope him back in the conversation again, is that the cure to high prices is high prices, and the cure to low prices is low prices, because eventually demand will go up or down to follow that. So as we see maybe herd sizes decrease, looking at cattle and maybe on pigs too, to some degree, at what point does the market struggle to really maintain at the price levels it's at on the commodity side?
So Monday of this week, I really felt like corn and grain sorghum and wheat. I'm going to put that whole feed grain complex, corn, soybeans, and wheat. The market action on the day just gave me the sense that they wanted to move higher, that the market wanted to move higher in those commodities. The problem was soybeans had a bad day. Soybeans drug the whole complex down. And that caused, or it held at least those feed grains within check. But I got the sense that they wanted to move higher. Soybeans are kind of the drag a little bit on the market for these crops. I think some of this is intention to that acreage report I mentioned earlier, with people thinking that some corn acreage shifted over into soybeans. But really, that's I think the big thing here, Will, is like we've got some fundamentals in corn and grain sorghum and wheat that certainly would suggest lower prices, but the market sentiment is maybe that, hey, we could see a little bit more of a rally before we taper back down a little bit. So some bearish fundamentals, but or at least more bearish than what we had a month ago, let's say, but certainly the market sentiment wants to move higher. So, or I feel that way.
Yeah, no, it makes sense too, because it's one of those things where, well, I guess it's the adage. I guess from the livestock feeder side of things, it's things will get just a little bit worse, but then they'll get better. So it's almost trying to just withstand these prices just for as long as you can, until you're almost the last man standing. Now, maybe that's
Right.
a pessimistic view of things, but that's kind of how it feels.
Yeah.
All right. Do you have any other, I guess,
Yeah.
global factors you'd like to talk about coming out of
Well,
this?
so the one thing about the US dollar, so we had kind of saw the US dollar temper back down after reaching a little bit of a peak a couple weeks ago. The inflation data we got last week showing that inflation is not plateauing, it's not decreasing, it's actually accelerating, especially in some of the components like food. Well over 8% year over year. That sent the market kind of into a frenzy, and we've had this big sell-off in the stock markets, and that's caused a rush to the US dollar. Strong dollars create headwinds for exports, and I think that's a challenge. The other big thing this week is the Federal Reserve on Wednesday is going to come out with their updated position. I looked at the probabilities of what the Federal Reserve increase could be, and they're almost exactly flipped from what they were a week ago. So a week ago, the market was anticipating about a 90% chance that they would only do a 50% or a 50 basis point increase. As of this morning, that has switched to where now the market anticipates a 90% chance of at least a 75% interest rate increase. So it'll be interesting to see what the Fed does tomorrow. They've largely kept with their plan all year. of doing 50-point increases. We'll see if they break from their messaging and do a 75-point increase tomorrow.
It's kind of funny watching these as if they're weather reports, watching what adjustments could take place and when.
Yeah.
So, all right, for traders to watch some reports coming out this week, we have the ethanol report and the NOPA report coming out tomorrow. Also, like you talked about, the Federal Reserve will push some adjustments out on Wednesday, and then export sales that comes out on Thursday. I'm Will Robinson. I thank you for joining us this week. If you'd like to check out our counterparts on the livestock side, that's Megan Grebner and Scott Brown with the weekly livestock market update. You can find that at brownfieldagnews.com. Ben, thank you for joining me this morning. Again, I'm Will Robinson on Brownfield.